Hello, my name is Russell Myers. Welcome to Issues Unite. So the fallout from the SBV, the Silicon Valley Bank, continues. Like I said in one of my last videos, it was actually 3 banks have fallen. And so I am going to give Biden credit for some of what he's done, which is refusing to bail out the investors in these banks. But, and it sounds good on the surface, what he has done, which is to make sure that all depositors in 2 banks, SVB and another bank in New York, that they will have access to all of their deposits. Well, this sounds good on the surface. So this is covering deposits that are above $250,000. For startups, this is necessary. Tech startups, which is mostly what SVB allegedly was involved with. But there were also large corporations, like I think Roku had something like $2 billion in an account with SVB. There were a number of large depositors that were not startups that had accounts with SVB. In addition, I mentioned the other day that the CEO of SVB, until last Friday, sat on the board of the San Francisco Federal Reserve Bank. In addition, the CEO and several other bank executives since the beginning of the year have sold off millions of dollars worth of shares in this bank. That's a big thing. They've been selling off shares, including the chief finance officer. All right, so there are other things that are coming up which just smack of nothing but pure corruption. California Governor Gavin Newsom had at least 4 or 5 accounts with SVB. At least 1 personal account, 3 accounts for wine, orchards or wineries that he owns. And his wife has a nonprofit that had an account with the bank too. And just by coincidence, SVB had donated $100,000 to her nonprofit. So Gavin Newsom was instrumental in getting this bailout for the account holders passed, and he never publicly divulged his connections with SVB. The fallout from all of this is still happening, and it's not going to stop. We're not going to know the full extent of this or see the end of it for quite some time. One of the effects of this is that smaller regional banks across the United States are seeing people withdraw their money from the smaller regional banks and deposit their money into the large, too big to fail mega banks Two that have seen a massive inflow of deposits are Goldman Sachs and you're seeing Citibank, Wells Fargo, etc., that are seeing massive inflows of deposits, while smaller regional banks are seeing people withdraw their money. This will eventually, especially with you see losses these smaller regional banks have taken, this is going to lead to more bank failures at some point. It may not happen immediately, but it will contribute to it, very much so. In addition, we're seeing the contagion from this spread internationally. There are pension funds that have lost money from this. Some of those pension funds are in other countries, like in France. Credit Suisse took a major hit, and they'd been having problems for years. And the only way that they are being saved from collapsing is because of a massive loan. I think $50 billion, it might be $70 billion as a loan from the Swiss government. What happens if they're not going to be able to pay off that loan? We have no idea. Deutsche Bank also has been having problems for years, and they were connected to SVB, and they took a financial loss on this. Anyway, so we see massive amounts of money being pumped into and consolidating in the largest banks in the United States, and lots of implications that are happening with international banks. So all of this money keeps on consolidating, and we will see the failure of many regional banks, which probably won't even hit the news cycle. It'll happen very quietly. Remember, from 2008, it took 2 or 3 years before we actually saw the complete view of what had happened, and there were a number of smaller banks that fell during that time and led to more consolidation into the larger banks and financial services industries. Also, what we're seeing is more people buying precious metals like gold and moving their money into other investments, bonds, and so forth, and away from the stock market, or at least stocks in many certain industries. The fact that they decided to bail out the larger depositors, this is just you and I, the taxpayer, still bailing out mostly wealthy people that did not need to be bailed out. What is interesting that I have not heard anyone else talking about is how banks calculate assets, such as SVB claiming to have $200 billion in assets. Well, if you take out a loan with a bank, they claim that as an asset. It is an accounts receivable. So if you take out a $100 loan on a bank and you got 20% interest on that loan, the bank counts the interest over the lifetime of that loan as an asset. So it's not just the $100 that you owe them that you borrowed that is an asset, or or a debt, but they count it as an asset. So if you borrow $100 for the course of a year at 20% interest, then you're going to pay $120 back. They count $120 as an asset. So keep in mind how currency gets created. You walk into a bank to take out a loan. When you walk into that bank, that money does not exist. It is created when your loan is approved. And yet, what you pay back has to come from actual money, currency, assets that you have earned, which inflates the assets that are held by the bank. So it is all just created out of nowhere, and all of a sudden they've got more money and you've got less. They fail. Who gets bailed out? And who does the bailing? Who pays for it? You pay for whoever is getting bailed out. At the press conference where Biden was announcing this bailout, and true to form, Biden refused to take any questions from reporters. One reporter asked a very good question as Biden walked through a door and closed it behind him without looking back. The reporter asked, so if other banks fail, are all of the depositors' assets going to be guaranteed as well? So if these other smaller regional banks start failing one by one, are all the depositors going to have their money guaranteed? And so far, Biden says that the depositors' deposits are being given back to them in whole, all of them above $250,000. This is being given back to them by the FDIC, but the FDIC only has $100 billion available to them for this purpose, which is mostly going to be taken up by the two banks that are being bailed out so far, or the account holders. What if we see another 3 banks fail, or another 5 or 10 or 20? Is the FDIC going to make their accounts whole? Who knows? But if not, then why were the depositors at that particular bank, or those 2 particular banks, given preferential treatment? Well, part of that goes to what I told you about Gavin Newsom. This is all political. Gavin Newsom, multiple accounts. The CEO was a member of the board of directors of the San Francisco Federal Reserve. This is all, political connections. So the next thing is that a lot of people are calling into question whether the Federal Reserve is going to continue raising interest rates, or if they're going to put that on pause or backtrack on it. It seems unlikely that they're going to stop, but they're going to slow down and raise interest rates by another 1/4% instead of 0.5%, 25, or as they term it, 25 basis points or 50 basis points. If they stop or reverse course, then inflation is going to continue unabated. If they continue raising interest rates, that means more jobs are going to be lost. So this is a no-win situation here. Not with the way that this is being handled. This is a no-win situation. It's a zero-sum game. If more banks fall and the FDIC exhausts the $100 billion that they have available to them to guarantee bank deposits, then to guarantee even small bank deposits, smaller accounts, like you and I probably have, then it's going to take the creation of more currency and more debt more debt created by the federal government and more currency created by the Federal Reserve. And all of this serves to devalue the dollar more. That's in addition to the fact that lots of small businesses will wind up closing. So this is going to continue. We haven't seen anything near the end of this, and we're not going to see the end of it for quite some time. So buckle up. And it's not going to surprise me if the Federal Reserve turns around and starts with quantitative easing again, but they won't call it that. They'll do quantitative easing and, say, well, this is not quantitative easing, even though the Federal Reserve will be expanding its balance sheet, which I think is at $7 trillion, or maybe $9 trillion right now. So share this video, talk about these subjects. If you can afford it, please donate whatever you can to help expand this channel and my presidential campaign. Let's wait and see what is going to happen from here. All right, thank you for watching. I hope you have a good day, and I will catch you in the next one.